G'day MegaWhale team and welcome back to another video. I hope you're all having a fantastic end of your week and I hope you're looking forward to your weekend. In today's video we are taking a deep dive into the short-term price action and the macro charts as Bitcoin on the daily chart is currently retesting the major uptrend on the daily RSI. If broken, could trigger a short-term correction back down to the weekly leading span B at 80,000. We'll also be taking a look at the macro in regards to how the price action is developing and how it has been developing within the leading span A and leading span B, the Ichimoku cloud. We'll be taking a look at a Kumo twist on the weekly chart, the 50 EMA on the 2-week chart, some key levels on the weekly and 2-week in regards to other indicators such as the Gaussian channel, and we'll be diving deep, like we said, in the short term, discussing exactly what is happening, what you should be expecting, and how you can prepare moving into next week. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS. No emotion, just pure, raw TA. And if that is the kind of content you're interested in, you can join us on Telegram. This is the first link down below. We post daily updates with charts, analysis, educational posts, videos, and really everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump into it. So this week and this month overall has been quite an interesting one. If we look at the weekly chart very quickly, the first 2 weeks of December have officially nearly ended, and if we take a look at the 2 weekly candles, these weekly candles have been very small bodies and very large wicks, suggesting a period of indecision, consolidation, chop, and just a general sense of uncertainty. Now, this uncertainty, although is a pain in the ass, is actually completely expected at this particular stage in the macro downtrend, according to both the technical indicators and how the price action has developed through the course of the last 2 months, but also the historical price patterns we've seen during prior bear markets. So although it has been horrendous to trade and it has been essentially just very boring, we're seeing volume strip out, we're seeing liquidations drop, it is still an expected move. The market is moving still in an expected manner, and this is a good thing because it allows us to project what is likely to develop, and it gives us an historical backing to indicate what is happening and how we can use that to extrapolate forward. So we'll discuss that in the video today. But overall, guys, we can see the weekly price action has been very volatile on the short term, but in terms of the weekly, it has been quite stagnant. So just taking a look at that short term in December, we've seen a lot of volatility on that immediate short term. Just on the hourly chart, you can see the aggression of the chop since the beginning of December. This was the start of December. Since then, we've seen these massive wild swings and consolidation periods up and down, essentially just sideways. We are basically at the same price we were 12 to 14 days ago at the beginning of this month, and with that we've seen a lot of consolidation on the short term and a lot of larger 1 to 2 hour moves. When we're looking at the daily chart, we have just seen a breakdown of that daily RSI, and this is a warning sign. This is telling us that the buyers since 80,000, since the leading span B retest, have been in control or have been trying to regain control, but have failed to do so. This breakdown in the RSI is signifying a negative momentum shift. Essentially, the buyers have exhausted on this attempt to push the price action upwards, which gives an increased likelihood of a shorter time frame correction, which may potentially spill over into those weekly and higher time frame charts. We'll discuss that in the video today. So a bit of a longer intro there for Bitcoin because there is a lot going on, and we need to be discussing everything in detail today. Moving over to the market data, we'll come back to DXY and the S&P 500 in a second. We're looking at the market data As expected, volume, liquidations down 14%, 30% respectively. Liquidation sitting at 333 million, the majority coming from long positions as Bitcoin did tank on the 1 hour chart there, and 24-hour volume at 227 billion, so still relatively low for the month of December. Moving over to the DXY, not much happening here, bouncing from the conversion line over here, or should I say the baseline here on Ichimoku Cloud, watching that level very closely. All in all, it doesn't really matter what happens between this horizontal resistance and the uptrend. We can bounce around over here. It is really going to be these two levels we are watching as trigger points. We break that uptrend. This is going to be about a 10-year-long uptrend on the DXY where you're watching. So we break that, expect aggressive continuations lower. And if we clear 100 and we're able to maintain above 100, expect continuations higher. If we're looking at the expectations for future interest rates, we did see during the Federal Reserve press conference, some very important things were mentioned. Number one, they were only looking to do potentially one interest rate reduction next year, and that is potentially going to be a narrative shift. And of course, number two, they emphasize that there is no risk-free path moving forward with the current conditions of trying to balance inflation with a cooling labor market. It is making it tricky and it is making it uncertain. We've left all the keynotes in the Telegram channel. You can read that entire paragraph for it. But all in all, that adds some pressure and adds some strength to the dollar and takes away from the risk asset market as a slightly bearish tone is being established. With that, we saw the S&P 500 drop back down. Again, we came back up, retest these levels we have rejected. This is still a resistance. If we remain below here, expect continuations lower. Only if we clear and maintain above, would we expect continuations to all-time highs. Currently, it is still looking bearish. Let's move over to Bitcoin, guys. Before we jump into Bitcoin, make sure to go ahead and sign up to BitGet. BitUnix and BingX, the exchange links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making the content and you'll support yourself in your trading journey. Check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back into it. I want to start on the immediate short term and then build it up to the higher time frame charts. We have a lot to discuss, so let's jump right into it. Starting on the short term, we can see since the beginning of December, we have been in this slight gradual upward chop and consolidation since around that 80,000 level. Now we know already, and we'll explain further in our macro analysis, that the boundaries of the consolidation for Bitcoin currently, based on the technical data and even also the historical data, is sitting between that 80,000 level and that 96,000 level. Now, the reason these are important, or these act as our boundary levels, is because they are represented by the leading span B, which we can see to be this red line, and the leading span A. Now, based on historical data, when we break below the leading span A on the weekly chart and move towards the leading span B, not only do we see bounces, which is exactly what we have seen, but we do not see the price break back above the leading span A, hence it is an upper level of resistance. Based on technical data, when we break below the leading span A, that level flips to be a dynamic level of resistance. So no matter if you trust the historical data, or you're looking solely from a technical perspective, this is still going to be a key level of resistance at that 96,000 level and the key level of support at that 80,000 level. Now, furthermore, if we're looking at horizontal levels throughout this, we have got critical horizontal levels through these particular price points, which we'll discuss in just a second. But when we're looking from the technical data, we have seen a gradual uptrend as anticipated develop from this level, and we have pushed into this $92,000 level, which we've been retesting now for numerous days, pushing above, rejecting below, holding steady. It's been acting as a bit of a rejection point, a bit of a resistance point for Bitcoin. Now, what is important is through this uptrend, we have seen some bearish absorption, but only in the last 24 hours have we really started to see that RSI trickle downwards on the daily chart and run the risk of actually closing below. We have not yet closed below. If we look at the daily close, we actually closed just on it. If actually I zoom in, actually it does look like we closed below. So we just closed below. So we have confirmed here a negative momentum shift on the daily. Now, what this means, as I've said in the intro, it means that the probabilities now are in favor of the price breaking this uptrend prior to clearing and maintaining above the current resistance at around 92 to 93,000. So that means the price is more likely to see a loss of this trend and push back down into sell side liquidity at around 86 to 83,000, test this area of support and either bounce, or if we break down, we will drop all the way back down to the leading span B. Now, we can theoretically move back to the leading span B and then bounce back upwards. That is acceptable. Of course, we know the leading span B will act as a temporary point of weekly support. Nevertheless, on the short term, if we're looking for danger signs or warning signs, or signs the price will potentially move in any definitive direction after what has just been days and days of chop, this is going to be it. So this is a very big sign that we will actually like to see some more, likely see some more maintained directional moves, at least over a couple days, moving into the new week and the new weekend. So watch out for that, guys. And we're zooming out to a slightly higher time frame here and just zooming out on the chart. We move over to a weekly chart. As we mentioned, the leading span A and leading span B are one of the most important levels we are watching. Now, yes, there are other indicators such as the Gaussian channel. You can see the Gaussian channel lower band is acting as a temporary support. And if we go to the 2-week, we've also got the 50 EMA. Let's quickly break these down and discuss why all of these are important, but also why they are all kind of representing the same trigger point. Before we do that, let's quickly discuss the leading span A and leading span B in a little bit more detail and when we expect it to break down. So moving to a macro chart here, we can see this is going to be a weekly chart. Now, I want to quickly show you, based on historical data, now, whether or not we overlay the 4-year cycle or not, this is nothing to do with the 4-year cycle. It is happened with the macro downtrend when we see these macro shifts, because Ichimoku Cloud is a good indicator of predicting overall trend directions and trend shifts, but it is not bound to the 4-year cycle per se. The 4-year cycle is not tangible. It is a diagnostic method of analysis. It is not predictive by nature. So a lot of people try to discredit this information because they don't believe in the 4-year cycle, but they are not part of the same thing. They are separate, but they have confluence with each other, two different things. So when we look at the Ichimoku Cloud in macro downtrends, particularly after major uptrend reversal points, we can see historically when we have broken through the leading span A and tested the leading span B, we do not break back above the leading span A. You can see it act as a resistance right over here. And then we saw a macro correction to an eventual macro bottom. When we look at the next phase, we saw a macro top. We went into a macro reversal, breaking the leading span A, breaking the leading span B. What did we see? The price action did not break back above the leading span A until only after we created a bottom, and we did that much further on. If we look at the prior time we had a macro top, the macro top was established, we broke the leading span A, tested the leading span B, and then we retested the leading span A for about 2 months. We actually came to around 100 days, nearly 3 months of consolidation upwards, retested the leading span A, never once being able to clear above it, never once closing above it, and eventually then breaking the leading span B and entering this downtrend. So what we can see historically from a technical perspective, and yes, it has some relevance to the 4-year cycle because it's happened during the beginning phases of the 4-year cycle bear market, is that the leading span A has acted as a rejection point once we lose it, and the leading span A acts as a bearish trigger point when we eventually break below it. So to put that in layman's terms, when we break the leading span B, we will exit this stage of the bear market, which is an expected consolidation stage after the initial mean reversion, and move into the next macro leg down. And if we test the leading span A, this is going to be an expected potential rejection point on the short term where we can see pullbacks develop from. Very, very important stuff. Now, when we're looking at the expected breakdown date of the leading span B, we can look historically and measure the amount of days it took after the leading span B was tested for it to then break down. And historically, the amount of days it has taken have seemed to drop around 20 days each cycle. And here comes the cycle confluence, meaning we would expect to see around 80 days for a breakdown, which will take us to around beginning of February, late January 2026. Now, that is not written in stone. That is just a rough estimate. If we were to factor in that December is generally a month of indecision, we can kind of write off the next 2 weeks, and then we've got basically a 3 to 4 week window where we could see an early breakdown, and then of course a 3 to 4 week window when we would potentially see a later breakdown too. So we have this month and a half to 2 month range where we could see the breakdown, with the middle point being around early February. So again, watch that very closely. Let's jump over to our other indicators now. When we're looking at other indicators, we can look at things like the Gaussian channel. Now, the Gaussian channel as well has acted as a major trigger point. Again, you can overlay the 4-year cycle, you can ignore the 4-year cycle. If besides the point, it is simply complements the macro directional shifts. When we see the loss of the Gaussian channel lower band, we enter the capitulation phase. We enter that larger corrective move, which eventually takes us to the bottom. We saw it there, we saw it over here. If we move down to more recent price action, we saw it over here, and we are retesting it yet again. Where is it currently sitting? The Gaussian channel lower band on the weekly chart is currently sitting at around 83,000. So if we're looking at this short-term price action, and we take a look at this breakdown in the RSI, and we say, well, Whale, if we break the RSI and we're going to go lower, where could we theoretically move to in the short term? The answer to that would be, well, we're moving to sell side liquidity, most likely, which is sitting in this yellow box. I'm not too sure why this is yellow. I don't really use that color very often, but it is what it is. This gray box now, the preferred color I like to use. This level here is actually sitting literally just above the Gaussian channel weekly level. The Gaussian channel weekly level is sitting about $300 to $400 below this orange line. So we see that pullback into here. We can see liquidity grab touch that Gaussian channel level and then continue to bounce for the rest of December. That is a real possibility. So we are watching that very closely. And if we do drop below this level in the short term, if we drop below that level in the short term, I think that is going to be the confidence we need to see a direct correction into 76 to 74,000. And if we see that happen, well, it is very likely the Gaussian channel breaks, the leading span B breaks, and we enter an earlier next leg down. So watch out for that as well. And then the next thing we're watching, the 50 EMA on the 2-week chart. We have 9 days until to close. It is unlikely to close below in 9 days. Historically, again, has acted as a major support level. And when we break below it, not only do we see a break through the clouds, we also see the price break to the bottom side of the 2-week Gaussian channel, which will eventually mark the macro bottom. So the macro bottom will likely be below the 2-week Gaussian channel, which at the moment, if we were to extrapolate that forward, that would potentially take us, I would say, sub 60,000, I think 52 to 36,000. Again, that exact price point may vary depending on when we hit the bottom. If we hit the bottom earlier or later, the price target might change slightly. So we have to consider that as well. We'll keep you guys up to date with how it develops. Let's quickly end up on, what needs to happen for the buyers to get back in control, because I think it's evident now, at least in the short term, that they're really struggling to regain control here. When we flip the chart over here, we have this downtrending RSI, we have a potential wedge formation developing here. If we break that upwards, well, we're going to see continuations higher, right? What needs to happen for these buyers to get in control? And I think the real simple answer So we've been saying the entire time is we need to, absolutely need to clear through that $98,000 level. This is going to be our breakout structure. This is going to clear the leading span on the weekly chart. We need to see some sort of trend break. We need to see some sort of historical pattern break to give the market the tone shift it needs to actually rally upwards and continue higher, because all these bounces so far are just exhaustion bounces. There's no strength behind these moves. We're just exhausting. Every single bounce is just immediately exhausted back into support, low volume, low confidence, uncertainty from an economic perspective. It is not looking good for Bitcoin yet. And I really think for us to be entirely confident that the risk of the macro continuation lower is over, 108,000 is the level we need to clear above. And if we're looking at percentage-wise, that's about a 15%, 16% move away. So we've got a lot of breathing room for this macro downtrend to remain in play per se, before it becomes invalidated. I'll leave it there, guys. Thank you for tuning in. Of course, this will most likely be our last video for a bit. I'm going to Hong Kong tomorrow, literally, so I'll be doing videos once every third day, and I don't think I'll be doing one tomorrow, of course. I don't think I'll be doing one on Monday, so maybe Tuesday or Wednesday. So we're only going to do one video every third day until we get back, which is the end of the year, and then 2026 we'll be back at our full schedule. Monday, Tuesday, Thursday, Friday, Saturday videos, 5 times a week. Thanks for tuning in.